Hi everyone, it's July 28, 2021. It's a Wednesday and we're going to discuss the Awesome 10X Global Market Update. In today's topic, we're going to talk about this. Bottoms happen when people give up buying. Indeed, in my experience of capitulation and all the types of charts that I've seen I only have a decade of investing and trading. The Chinese stocks today, I'd have to say, is this one. The term that people say is bottoms happen when people give up buying. This is a popular technical term. It's called the disinterest period or period of neglect. That's called the long flat periods. Right now, you're in the capitulation period. That's the heightened volatility. But usually, what happens after that volatility is 6 months flat periods. I always said to people that we call it the DFA system. That's something that I conjured. D is despair, fear, apathy, greed, euphoria, and sanity. For most traders, the one they hate the most is apathy and disinterest. But the apathy zone or the disinterest zone is actually where a multitude of money is made. An example of this interest happened in Farfetch last year. If you can recall, this happened when the market disagreed with the Off-White acquisition of Jose Neves. That happened when it was trading at $8 then, and it only made a retest during March 2020 lows here at about $6 to $8. Funko also had a disinterest period. This happened when when they kept on saying that toys were actually having a hard time and materially lower sales. So you could see it happen here during March 2020. And in a period of disinterest, this is also known as accumulation period for other people. But the only ones accumulating these companies are those who have long-term investment horizons. So Tencent in 2019, if you can recall, even these Chinese company had a disinterest period last 2019, even when all the 2019 gaming companies were actually significantly outperforming. Hi guys, sorry. Okay, I got disconnected. Let's repeat. So I said that this interest periods, right? Okay, so let me just give you some examples here. Tesla used to be in a disinterested mode. You could see that in 2018, it didn't matter whether solar power was the cheapest form of energy and battery production was well on its way. Only the true believers of Tesla was buying. And you could see that it suffered a 7 year gestation with $78, always a resistance. Only when that broke out on September, October 2019, did it actually go further 10x move, actually 20x move from $80 to about $800 and $900 times five. Multiply that times five, or $400 to $4,000. You could also argue the same thing happened with Ethereum after massive sell-off from 2019 till 2020. Ethereum was trading at about $80 to $230. Only nowadays we're seeing a 10x or 30x move in Ethereum after that this interest zone was finished. So I'm saying to people that CD Projekt is also in a disinterest zone right now from 140 to 180. And I'd argue that in the Philippines, there's actually a huge disinterest because of the fact that Philippines as a country also suffered from authoritarian regimes. Unfortunately, the difference between Philippines and China is that Philippines doesn't have scale, unlike China, wherein the government can always go plunge protection. And this is something that most Chinese investors have to understand. Integrating with China has a profound impact on how global investors are allocating capital. The truth is that China is too big to fail, China is too big to ignore. Although there's no consensus among global investors on how they would manage their Chinese exposure in their portfolios, it's true that just like cryptocurrency is too big to ignore and it is an asset class, Chinese stocks are also an asset class because China's meteoric rise since the late 1970s has been about their opening up of reforms and capitalism. This is the major reason that you have to be bullish in China, that they will not actually change their policies for nothing. Right now, the biggest question in China and the reason why they had a clampdown in the education sector was because of this huge problem. China's population is driving home the severity of demographic crisis. In the first 6 months of the year, China's declining number of births, low fertility rate is affecting how globally competitive China will be in the future. What's next after China is fining so many technology firms? You have to understand that China's workforce is actually 900 million people in 2020, and they're very scared about this workforce being low. Amongst everything that I had to study, the biggest investor in China is, of course, China Investment Corporation. This is the largest sovereign wealth fund. And the largest sovereign wealth fund has publicly stated their investing strategy is betting on agriculture and global food supplies. If you study this carefully, it tells you that pintuoto at $70 or $80 is not to be disdained. Also understand that during the outbreak of COVID-19 pandemic, they actually said that their fund grew exposure to the digital economy theme and a carefully calibrated approach to managing investments in non-public markets. How much investments do they have? Mostly into the likes of Alibaba. Could see that they've injected $2 billion into Alibaba. This happened 5 years ago. They were also buying up companies with Tencent. China Sovereign Wealth Fund invested with Supercell, also private equity. They also invested in Didi. They also invested in Pintuotuo. They also invested with JD. So if your question is, will China actually disrupt the Chinese big tech like bats? I'd say bats won't fly, but they also have very little hard landing as we speak. So as you could see, the K-Web or the Chinese Internet ETF, it's quite normal that when you buy these sell-offs of epic proportions, you could see that the massive sell-off has now happened in the likes of more than 60%, from 105 to 46, more than $54 down, $59 down. Sorry, 54 plus 5, yeah, $59. This is the biggest sell-off in internet since 2008 crisis. I'd like to read to you the things that most Chinese observers are saying. The biggest woes facing China is their aging demographic. The recent policy allowing a third child is not the only card that the government is playing. They want to lower the cost of raising that child. And the stress in Chinese kids and parents, it's under these days, it's very huge. Primary kids right now cannot even carry the books. They're going to cram schools and schools. And all these after school tutoring is really a hindrance to this Chinese goal of enabling more births for the families. So also the tier 3 and lower cities have increased inequality in education attainment. And therefore, Chinese policy is simply lowering that inequality. So most of the journalists are actually saying that it's understandable what China is doing. And you have to understand whether it's Hill House VC or Himalaya, they know that the rules of the game in China is invest with China, not against China. China, if you're investing in Alibaba or Tencent, you're investing with the government. Remember that. You're not really against it. All the policies of Tencent limiting the kids in video games from 10 p.m. to 8 a.m. is just to help the Chinese parents and these kids to actually understand that they have to study and not be addicted with games. This is not a blanket kill-all order for all Chinese tech, as Lillian Lee says. Everyone worth their salt during this year is not gonna be has to lay low. You've seen how Alibaba laid low. Why would you attract adding attention unless you're DD Global, who was a bit stupid? I'm very comfortable in seeing a great future for these tech players. The next big thing is really to make having children more affordable. So understand that the pricing of houses will be going down. So definitely the property sector will not have profitability for the next 10 years, if ever. Regulations about those properties and education is going to be at best affordable. So understanding all the things happening in China, let's take a look at the charts nowadays. Okay, let's take a look at the biggest casualty in my view, which shouldn't have been Tencent. All right, Tencent right now is at $438. Took a look at Tencent Global, you could see that Tencent's earnings and revenues are all coming from all facets. Interactive gaming, which is 50% of their entire world. Let me take a look again at the metaverse. I'm not sure if I shared it in my profile. Okay, let me see if I did. Yeah, I did it. But I'm going to go through that. Taki McCormick actually has a good this one. So we keep repeating on the essentials, right? Tencent is not a Chinese company. It may be a Chinese founded company, but look around, Tencent owns entirely the world. It's global. Tencent has ownership stakes with Riot Games, Supercell, Epic Games. It owns League of Legends, Call of Duty, Activision, Roblox, Fortnite, Animal Crossing, Minecraft. It owns Baidu. It owns Teachable, OnlyFans, Twitch, Discord, Snapchat, Douyu, Huya, Reddit, House Party, Voov, Zoom, Airtable, Bitcoin. It owns Flipkart, Meituan, Pintuatua, WeChat, WeChat Pay, Katabook, Paystack, Gojek, C Limited, Shopee, C Money, Farfetch. To say that China is the only country that Tencent is domiciled is quite too small for you to think. In fact, even Thailand, Malaysia, everything that's happening in the fintech world is dominated by Tencent. So even if people say bats won't fly, understand that bats won't fly, but bats won't actually fall as well. So here's Tencent. We'd argue that, okay, with this Chinese Cold War happening, okay, we'll see that Tencent will trade somewhere from the likes of 400 to 500. It's a 25% range in my view, and it's happening right now as we speak. This is Tencent. Any drops will be bought. There will be some sell-offs, but this is not something that is new. Same for Alibaba. Cloud computing is going to be released. The results are going to happen this this week, next week actually. So Alibaba is now trading at 100 billion revenues with 30 billion of free cash flows. Um, Understand that anything can happen in the short term. Rallies would be sold here at 199 for Alibaba, but definitely 180 or 170 has a lot of buyers as well. So we start with the biggest tycoons, Bats, Baba, Tencent, and Baidu. Take a look at Alibaba, Baidu. Baidu will not go past $180, but definitely here at 157 or even at 130, you definitely will have some buyers tonight in China, in Chinese tech. Last night, we already saw that the beneficiary of this capital control has been cryptocurrencies. Bitcoin is 40,000, Ethereum is $2,300, Binance is 300. This is really telling you that the world believes renminbi is not the global currency, the dollar is not the global currency, and maybe about 50 years or 100 years from now, Bitcoin is the global currency. So it's murky. Not saying that it's not easy, but as I said, marriage and investing has a lot in common. You have to go through thick or thin, no matter what. So that said, I've been positioning myself in Chinese tech, like Alibaba and Tencent, no matter how tough. Agora, I said, is also a buying opportunity as well as Douyu. Could see that last night Agora has been bought here about 25 to 27. Douyu last night has been bought here about $3.75 last night, 3.77. I'm not here to pretend I know the bottom, but with total fatigue, even from the seller's standpoint, how am I saying that there's total fatigue? For the first time in a long while, your Chinese technology, which should have been zero, were actually up last night. So I can only say that when a TAL and Edu started to rise 10% last night, that's what you call short covering. This was short covering for TAL. Edu was being short covered last night. So with so much short covering last night, no, for Edu, I'd say that I won't buy. Let me say I won't buy it. But the short covering happening in education names tells me that there's a seller's fatigue right now. Friday, Monday, Tuesday, we'll see later, Wednesday, Thursday, Friday. It will continue to be choppy. But if you're betting on the outcome for the week, understand that seller fatigue means there's bottom fishing happening. What's happening with Hang Seng right now? You're seeing already some bottom fishers right now in Hang Seng index. First time from 24,000 to 25,300. Of course, there's resistance here at 26,000. But there's some bottom fishing happening here in Hang Seng index. Same as FTSE, China index is also getting some buyers. Okay? Very tough, but persist through it. All right? Thank you very much. Lots of noise. Bye-bye.